like I said, creepy little voice. Just give everyone a couple of minutes to jump on. Right. And there's, okay, it's gone. Right. I feel like I start every single one of these webinars apologizing because there's usually like some noise coming out of my window and I never know how much everyone can hear, but I'm going to be on mute most of the time, so it's all good. Yeah. Hi to everyone who's joining. Welcome. Perfect. Great. Thanks. Good. Hey, Josh. Where is everyone coming in from today? Got Jesus, you've told us before. You're in Paris or somewhere? Brighton. You're not in Paris. You had a perusing somewhere. Got a few of you in Paris. Okay. Yeah. Right. I'm going to keep giving people a couple more minutes to get in, join from whatever calls they're coming from. I'll cover my usual kind of admin point from now. Still getting questions about mentors. The emails are going out kind of as I speak, and as we go through the session, they will be coming through. So you will be connected to your mentor today. As mentioned yesterday, I think, if you were on the call, I'm sorry, I had to prioritize those whose application to receive a mentor got in before the deadline. If we do get more mentors, we will connect you if you applied afterwards, but we're still working on that, but we're going to try and get everything sorted today. Yeah, I'm having a fight with our CRM systems, but you'll get your email by the end of the day at the very least. In terms of anything else, recordings, got a couple more questions about recordings. Always please check for recordings at the end of the week, not straight after the session. If you miss a session, all recordings will go up on the Friday, so don't worry, it will come up there if you haven't been there, but you check the next day and you can't see anything. Same with slides and ways to kind of contact the speakers. All of that will end up on Notion and also be in the recordings usually. So again, just wait until kind of the Monday after and everything's going to come on board there. I've got a couple of other things. Oh yeah, as usual, the Q&A box is open. You can see all the questions that are being asked. Please do upvote any questions that you particularly want to have answered. And please also, if I know the Q&A was acting up a bit yesterday, if that is the case, please just put your question in the chat instead, rather than raising your hand. I know we've got Sophia here today to talk about sourcing deals, and I know it's going to be quite an interactive session. I'm sure she's got a lot of insight, and I'm sure you guys have a huge amount of questions, which are always going to be better questions than the ones I come up with on your behalf. So please do just, yeah, don't be shy. I think that's all of the admin. Tomorrow you have a lunchtime session on SaaS investing. We've got Lucy from Octopus coming in to chat to you about that and about her approach. That session will be led by Yiran from the Future VC team. Seb and I are not available tomorrow, so if you've got any, but we will be back at the end of the weekend next week. So yeah, if you message at some point over the weekend and we don't get back to you, we're not ignoring you, just not in the country for 3 days, but we'll get back to you ASAP. That's all it. Yeah, Sophia, I'll hand over to you.
All right, thank you, Julia, and thank you everyone for tuning in. I see we have folks connecting from all over the world, it seems, here, so excited to meet you virtually. And I do want to encourage everyone to please jump in with questions. The idea is to make this as interactive as possible. I don't have slides prepared. I have quite a lot of talking points and really happy to go into any direction that you'd steer me into. So please do jump in with questions throughout. Before we kick off, I'll just start off with a bit of a background. So, Sophia, I'm a principal in the Index London office. And for those of you less familiar with Index, we are a venture capital firm that has been around for over 25 years now and investing everywhere from first check into a company to pre IPO across predominantly Europe and the US. And we do so from three funds. So we have a $200 million seed fund where we're investing anywhere between, broadly speaking, 500K to 5 million. We have a separate venture fund where we're investing up to roughly $25 million. And then we have lastly a growth fund where we're investing up to 70, $80 million per check, broadly speaking. And we do so across sectors. So we're sector agnostic, investing historically about a third in consumer opportunities with examples of companies such as Deliveroo or Revolut or Farfetch, and about a third in fintech. So examples of companies being Adyen or Plaid or Robinhood, and then also about a third into SaaS companies from both enterprise and SME angles. So companies including Notion or Slack or Dropbox or Skype being also a few other examples there. So that's a little bit about our fund, and we're constantly looking for new investment opportunities so we can keep investing from these three funds, which leads me on to sourcing, which is really the topic of today's conversation and an area that all investors spend a lot of time focusing on, as in order to make the investments and to continue to deploy the capital that we have over the life cycle of the fund, we need to continue to invest across a roster of companies for each fund. And for those of you less familiar with just venture capital economics, we'll mention this also because it feeds into the importance of continually sourcing and continuing to invest in new companies. Venture investment is high risk, but potentially high reward. So for one fund, we'll be investing across quite a wide set of companies. And given that it is high risk, it's really power law here in that we're expecting that all of them are quite high risk, but potentially very high reward. And so even though some investments may not work out, it really comes down to the belief that all of them have the potentials of being fund returners for us. And so hopefully, if we've done our job relatively well and been fortunate to work with founders who we really respect and believe are set out to do a category defining mission, we are hoping that at least one of them will be breakout successes, and in that sense return the fund disproportionately to the other investments. So in that context, it's really important to continue investing and to continuously feed our top of funnel of deals so that we can continue to invest and support the economics of the fund structure. So that leads me on to sourcing, which is an area that I, as an investor, spend a lot of time focusing on. And sourcing really comes down to identifying an investment opportunity, to building a relationship with a potential founder that we could work with, to building conviction really on a category, a theme, a trend that we're seeing right now, and ultimately the conviction also within that trend of a potential company in that space that we think within that space that we find exciting, this particular company has the potential of being a winner in that space for various reasons. So sourcing is really important. So how do we go about sourcing? So sourcing, I would think of really being anything from the first identification of a theme, a company, to then doing all the work to try to get in front of that company, to try to build a relationship with that company so that founder also would like for that relationship to be reciprocated and they'd like to work with us, and eventually figure out whether it makes sense for us to do an investment together. And how do we go about sourcing? It's really both a combination of quantitative work and a lot of qualitative work. So I'll spend some time thinking about all of these different levers and how we can think about sourcing and opportunity. Um, and again, I do want to encourage everyone to jump in with questions here just to make the conversation a bit more uh, uh, of a two-way conversation. And if you have specifics you'd like me to dive into, I'm happy to do that. So qualitative sourcing. This can be really anything from network driven. So building relationships, for example, with us, we're in sometimes the first institutional check into a company, really building relationships with angel investors that we respect and think are active and are investing into spaces that we think are relevant investments categories for us. And the purpose of that can be the angel is would be the first check, say, that's non-institutional into a company. But if we can, have strong relationships with angel investors that we think are um, investing into companies that we see potential for, also for index, that could be a way of sourcing potential opportunities through seeing the investments that those potential angel investors are doing. So really network driven and working with um, any investor who would be complementary to index. If we're investing from our growth funds, this could also be working and building relationships specifically with seed funds. And the way we think about seed investing in index is really complementary in that we want to be collaborative and work with other seed funds when we do these investments, and so also see a lot of opportunity for our deals to come from other seed investors that we respect and collaborate with, and would love to continue to do deals with. So that's sort of like the network angle of the sourcing from just the other investments investor perspective. Network driven sourcing can also come from us building relationships with operators that we really rate, or operators who we think through their network are able to potentially help us source companies that we think could be good investments for index. And so really just continuing to build relationships with uh, operators in our own companies, operators in companies that we think have done a tremendous job at scaling that are outside of our portfolio, and just identifying talent that we think is really exceptional, and through their network we think there could be interesting investment potentials for us. So that's touching a bit on qualitative side when it comes to sourcing through network. um, Qualitative is also just doing a bunch of secondary work. So going back to this question around investing in a theme or spending time exploring a theme that we're excited about, I can give you a concrete example. I think a theme that today gets quite a lot of attention is the creator economy and what's happening with NFTs, or what's happening to enable creators to have platforms online whereby they can really just share their passion, and through that also potentially monetize their passion. And so in order to try to potentially source deals in that space, if we believe this category as a theme is interesting and will continue to grow, more concretely, I'll spend a bunch of time just reading up on this, reading articles through from creators that I respect, and newsletters, and really just try to familiarize myself with what is happening in this category now, and through that try to see if there are potential investment opportunities to be sourced. So really just also an exercise in doing secondary research in a category. Um, Moving beyond qualitative work, um, there's also a lot of quantitative sourcing that can be done. And the way I think about that is really thinking through: is there any quantitative external signal that seems to suggest that it could be an interesting investment opportunity for index? So one way to go about that, for example, could be that I'm noticing, if I'm looking at a consumer opportunity, that one app seems to be trending in the app store. So a quantitative indication that something is happening, or that they're getting more, uh, you know, getting more followers on their various channels, whether that's a Discord channel or other social channel, or for example, that there seems to be a lot of website traction right now for this particular company through external signals. That might be a quantitative indication that there is momentum for a particular business, and it could be a way for myself to just get a signal externally that perhaps this would be an interesting company to spend time with. Um, I just do want to pause here because I do see that there's a question from somebody in the group wondering whether Index has a dedicated scout program in Europe to help with deal sourcing. We do not have a dedicated scout program in Europe to help with deal sourcing, but it's a great and very relevant question because more and more funds are working specifically with scouts to also help with sourcing, and could certainly be a way to extend one's reach when it comes to thinking through networks that you respect in a region. So definitely very relevant question, but we do not have that. And so just continuing a bit on the quantitative side, around whether they're external signals, I think that's a really powerful way to really gather external data on what could be a potential interesting deal opportunity. I think it is worth noting that that becomes more or less relevant depending on the stage of the company and the stage of a potential deal sourcing. I think early stage, a company will have much less data. And so also the relative importance of that data might be more or less telling. If a company is very early days, it's just 3 employees, um, eh, any kind of data movement might not be um, informative enough. It might be directionally telling, but it's still so early days that it might be hard to tell, concrete trend from hype, or it might be hard to deduce whether adding a few more employees is really defining of a company being successful. However, in at a later stage, when you're seeing um, a lot of directional data on a company, because it is at later stage, the data might be more meaningful externally, and so it might be more indicative that uh, the company is in fact doing something well, and given the magnitude of that scale and the direction that we're seeing, you may or may not take the data as more conclusive, and so it might be more or less valuable to look at external signals depending on the stage of the company. But that said, I always look at external signals. I think it's always something that is directionally significant, even if the company is at an early stage, but it might vary in terms of relative importance that we place on it. I'll pause there because I do see there's another question, and please do keep the questions going. I think it's great. So the question is there anything founders should be aware of when taking VC money? Um, so it's a fairly broad question. I'll try my best to address it, and happy to dive into specifics. Um, I think a founder should always be aware that they can take or seek financing through a number of ways. VC funding, should be noted, is just one way of seeking capital. There are other ways of seeking non-dilutive investment, whether that's through debt financing or so forth. That has different sort of setups to venture funding. I think what one should be aware of is that just knowing that you want to choose a partner where your interests are aligned. So, a venture investor will typically seek significant minority ownership, so in the range of 15 to 25%. And so, when you're seeking venture funding, you should be aware that it is a long-term relationship. It's typically between 5 and 10 years, and it's a dilutive investment, but it's can be an extremely supportive funding alternative, because um, you're not repaying that money in the form of interest on debt financing, but you're really taking a long-term view, and you have the potential to really utilize that capital to invest into growth, And hopefully with that investment into growth, you're also accruing much more value to your business. And so that will offset any dilution that you're giving to an investor, because you have the potential to really take the company to an exponential scale that you wouldn't have been able to do had you not had that funding. And the way we think of our involvement is not just about providing capital for long-term growth, but it's also providing you with a network, providing you with constant support um, for talent, constant support for introductions to corporates, if that's relevant for the business model that you're operating, and really being able to support with also future funding. So it's providing a lot of value that goes beyond just the actual capital itself, that we think could go a long way also throughout the growth trajectory of your business. So happy to spend more time, dabbling into trade-offs between different types of uh, funding that's available. But that's just one thing I'd stress when thinking about taking money from a VC versus other means. Um, there's another question here, going back to sourcing. When assessing the qualitative and quantitative signals, do you place particular weights on any of these points? Do you have set metrics that you would use to value them? It's definitely a great question, and it goes back a little bit to what I was saying about when a qualitative or a quantitative signal might be more or less important. I'll give you a concrete example to help address that. I mean, if a company has just been founded, presumably there isn't that much quantitative signal to go with, because it's a newly founded company. But if uh, I'm getting very strong qualitative signals from, say, an operator that knows this founder really well, has worked with that founder, um, I'll definitely be placing a lot of overweighted index on just the qualitative signals. Like, what are the references that I'm getting? What's the market feedback that I'm getting here? Just because there's less data to go with. At later stages, presumably there is more external signal that can be more conclusive. If a company is growing from 100 employees one year to 300 employees the next year, so meaningful growth rate, um, presumably something quite significant is happening with this company. They're not employing at that rate unless they're also growing fast, or if they have functions they need to fill. And so I'd probably take that data signal as quite a powerful sign that something is happening with this company. And so in that instance, I might skew more towards the quantitative as an interesting signal that I should be engaging with this company, because it's it seems to be growing fast, or something seems to be happening, indicating momentum or indicating some sort of inflection. So hopefully that gives some perspective to that question that was just asked, but happy to also go into more detail. And just to address the second part of the question, which was, do you have set metrics that you use to value these? Not really. No, we don't have set metrics. The qualitative stuff is more subjective, but as for quantitative, we don't have set metrics. No, it's more um, you know what you're seeing versus maybe what is market. I mean, I generally say if a company is growing headcount at that speed, that's an outlier, and so I just be inclined to connect with that company, and wouldn't be benchmarking it on any other metrics. Hopefully that addresses that question. Um, so those are some of the qualitative ways that we're sourcing, and then also address some of the quantitative ways that we're sourcing. Um, I do want to take a step back again and just address that, for myself as an investor, I'm spending a lot of time sourcing. I'd say if you think about making a deal as being the bottom of funnel, and that's, ultimately what you hope to do, in order to get there, you need to continuously feed the top of funnel. And I probably meet with, 4 to 5 new companies every day. So that's 20 meetings a week with new companies. And in order to even get those meetings in the diary, and for the founder to want to meet with me as well, I spend time researching and reaching out to perhaps a wider set of founders, than that, and do try to continue to keep meetings flowing, to continuously meet with founders that I think are doing something exceptional and exciting in new categories, and that I'd love to learn from and be exposed to, and hopefully, Index could be a good partner to them as well. So that's just to give you a little bit of sense of um, the, the volumes of meetings, and the fact that it takes time to do a deal, and so we have to continuously feed top of funnel to be able to eventually also do the investment. So that's just to give a little bit of context of the relative importance of sourcing in as part of the wider job of being an investor. Um, I'll pause there. I think we've covered a little bit about um, why we're sourcing in the first place, uh, why it's important to do so, and given also the economics, going back to the economics of the fund structure of venture firms, and then also the different ways in which we do so, whether it's qualitative or quantitative. I'll pause here and see if there are any questions. Otherwise, I'm happy to go into different directions here, and also spend time thinking through other just kind of more concrete ways in which you might source, whether it's going to a conference or so, which are more kind of tangible examples. But it all feeds into these buckets of qualitative or quantitative. So I see there are a few questions. That's great. So, how difficult is it to invest in different stages of a company's life? Does it get more crowded, competitive at later stages? Does Index prefer to invest in larger later rounds? Great. So Index does not have a preference. As I mentioned, we are a multi-stage investor, and we have 3 dedicated funds specifically for seed, venture, and growth. So we definitely don't take preference. We're always happy to meet just with exceptional founders in any stage of their company's life cycle. And we place equal emphasis on these 3 investment entry points. So definitely no preference there. As for competitive nature, I think today it's really competitive across. There are, a lot of high caliber funds that are investing early stage and later stage. So I think it's hard to say which one is more or less competitive. I think they're all equally competitive, and we place equal emphasis on trying to show how we can add value and be helpful to companies at each of these stages, um, in their life cycle. Hopefully that addresses that question as well. And happy to answer any other questions that have come up. Um, let's see, there's one more here. I'm just reading it to make sure I understand it. So the question is, do you have any advice on the best way to build your own personal deal flow as a young investor or persistent kind of venture wannabe? Um, yeah, happy to share my perspective, and I'll caveat that with I'm still learning as I'm going here. I'm by no means done with trying to perfect the way that I'm building my own personal deal flow. I think that's a continuously iterative process, and I'm still learning, but happy to share some perspectives based on my observations. um, I mean, I think um, if we're thinking about um, if we're thinking about network, um, I would encourage you to think that venture, it's a long term career. One can make an investment today, and we'll only know 10 years later if that was a good investment or not for the fund. So um, I'd really encourage you to think that your career in venture is long, and you'll know if you've done a good investments over a long time. And so I'd encourage you to also think that your relationships are long term. And so really try to cultivate those relationships, that it's not a one way street. It's two way. And you want to build trust with perhaps select folks that you think you could have a long term relationship with, and whose network would be mutually beneficial, and you can also reciprocate that backwards through the network that you have. Um, I'd think that could be a helpful strategy versus trying to have many but less deep relationships. So that's maybe one thing I'd encourage if you as a young investor are trying to build your own personal deal flow. And hopefully if that you've cultivated a few of those relationships continuously over time, you might be getting more or less more deal flow through those networks as you progress in the career. Um, um, we have another question here, which is VC is known for relying on warm intros to secure meetings. Do you review cold outreach? And if so, what is your approach? Great question. I should have touched on this. I get cold inbound all the time. And I look at them, and by no means I'm only taking meetings from just warm intros. That said, I think it can be helpful if you're a founder looking to connect with somebody to get a warm intro because, um, you know, given what I mentioned about us meeting a lot of companies every week and the importance that we place on a recommendation made from somebody in our network, if that intro is coming through somebody in our network, we tend to take them very seriously and really rate the inbounds we're getting through warm intros. So it might help set you up for success to get a first meeting very quickly, and also to also make sure that uh, you're getting investors in front of you that you'd like to meet with. But that said, constantly getting cold inbounds and meet with companies through that. If you are sending a cold inbound, I would encourage you to try to make it quite tailored, because if you imagine that an investor is getting many inbound emails every day, you'd want to try to make it show that you spent some time identifying why you're reaching out to Index, and why you think Index, out of the different funds that are available, could be a good fit for you. Perhaps, you know depending on the kind of industry you're in, or a recent investment that we've done that you think relates also to a theme that you're going after. I think I just try to make it a bit tailored, and a bit to the point, so that you setting yourself up for success, that whoever's reading that email, whether it's myself or one of my colleagues, would be would really want to jump on the opportunity to speak with you urgently. So that's just maybe kind of a tactical advice. But as for whether we take meetings through cold inbounds, absolutely, and I encourage everyone to keep sending cold inbounds. I've myself gotten a lot of introductions through cold inbounds, and I think it's a great way to get somebody's attention. So I definitely encourage that. Um, all right. So another question is, apart from attending demo days and conferences, what other ways of sourcing have you seen work scalably and repeatedly? Um, let's see. It's a good question. I mean, on the repeatedly side, I still do emphasize just personal networks. Um, uh, as for scalably, I guess I don't have a great answer to that. I do think conferences and demo days are a great way to do scalable sourcing. I'll have to come back to that question, have a think on what might be other ways. But definitely relevant. And as for that scalability questions, conferences are a great way to for investors to source, but also for founders to meet with investors, whether these are conferences like Money 2020 that just was in Amsterdam, or Slush in Helsinki, a big European conference. Usually you'll see that a lot of investors attend these. And so it's a great way to get exposure and meet with, hopefully many investors while you're there. So I also encourage you to do that. Um, all right, cool. I think I might have covered some of the questions that are here now. Um, I see there's another one that's just come in. Do you use any particular tech news website to help with sourcing and following trends? Absolutely. I spend a lot of my time reading tech news, and uh, reading about particular newsletters. I should have maybe been more specific. I sort of alluded to this in the section about secondary research and spending time just reading up on a theme, whether through blog posts or um, newsletters from individuals in certain industries who are prominent. that I think could provide really helpful insight. And I guess as part of that broader secondary research and just keeping pace with trends that are going on, definitely read tech news sites, whether this is TechCrunch and as like just a broad um, uh, a broad uh, news source to go to, or others in Europe. I think those are great ways just to get an overview of what is happening in the landscape, what investments are being done by whom, and are there any particular trends that seem to be prominent among those investments. Okay, if you were a founder, how would you build your network of VCs and prepare for a future funding round? Um, so it's a great question, and I think it's definitely something to think about when you're a founder, like trying to identify early on which would be potential good investors for me based on the company that I'm building. And um, the way I think about it is really try to building your relationship early. So again, going back to what I said, venture is a long-term game. And when we're investing, and we take a board seat, we're going to be on the board for 10 years. And so you want to also make sure that whoever you're working with and who you're partnering with, this is somebody that you want to call when things are going well, and it's somebody when you want to call when things aren't going as well. And you'll be having a long-term relationship with that individual at that, and with that firm more broadly. And so I just try to um identify firms that you think are um, it could be of interest to you, and try to meet with them early on, sharing your story, just to continue to have that relationship. And then what you can do is, if you're sending sort of quarterly updates, you can keep them within your email flow and keep sending them quarterly updates or bi-monthly updates, just so that you continue that informal relationship, so that when the time comes and you're actually gearing up for a proper raise, you've already been keeping them in the loop on your process, and it's not a net new relationship. You're really building on something that already has foundations. And I think, given that a lot of it comes down to individuals and personal relationships too, that's a good way of just building relationships early on, and sort of keeping them in the loop on your progress, but a bit more informally. So hopefully that helps address that question. um, All right. There's a question on which platforms do you find most value adding for sourcing companies. Um, I mean, I wish there were platforms that helped with sourcing. And today a lot of firms place a lot of emphasis on data science to help, and they're building their own in-house data science tools to try to get a understanding for which companies seem to be growing exponentially, whether this is demonstrated through website traffic, or just LinkedIn signals, or other things. If you have those in-house platforms, I think that would be a very helpful value-adding way for sourcing. If you're just thinking about publicly available platforms, um, I think it's very sector specific. So if I think of, for example, consumer apps, and I'm looking at that, I think App Annie is a great source for just seeing what kind of companies are trending on the App Store. And if do I notice anything that seems like outlier momentum when it comes to looking at downloads, or revenues of apps that I can deduce from App Annie. So I think that's a pretty good source. Um, LinkedIn, I referred to uh, previously. I think that's also a good way to just see what's going on within different companies. But other than that, I don't have that much more to add to that question. But hopefully that gives some perspective. Um, and then there's a question on, is there a minimum target return you look for when investing? Yeah, I mean, we're investing on the premise that we're hoping for outsized returns for our funds. And usually I'd say it depends a little bit by fund, depending on kind of the size of the fund, and the sort of risk reward we place on that fund. But typically we're hoping for a minimum of 5x return on our funds. And ideally we'd like more than that as well. But that's just give you as to kind of a sense of the scale, that it's usually 5 to 10x is what a VC investor would be hoping to get as a return on their funds. This differs. Some later stage firms might be closer to the 3x because they're investing much more, deploying much more capital for each investment. And so, because of that, uh, and because it's later stage, there's more data. There might be less risk involved in the investments because the company is already quite a large scale. It's already successful, and there the return profiles might be more in the 3x range. But if you're thinking venture, it's much higher than that. All right, another question. What are some of your sourcing red flags? Um, I don't know if I have any red flags per se. Um, uh, yeah, I don't really have any red flags there. I guess not so much a red flag, but maybe just something that can be improved. Going back to um, the question around whether we look at inbound and whether we are open to receiving inbound as a way for us to source deals. Again, the answer is absolutely yes, but there are ways of doing it better than others. So as I mentioned, try to make it as tailored as possible, perhaps do a bit of research on your own, a few crisp bullets about why you think somebody at Index should be speaking with you and why it's relevant right now, and why you'd like to speak with them. I think on the flip side, if you're sending very little context, not sharing a deck, um, sending quite a generic message that's clear that it's been sent around to a bunch of folks, I think that's probably, a less straightforward way of getting somebody's attention. So I would just, encourage everyone, who's listening in and is looking to get VC interest and shooting inbound cold emails, which again highly encourage. I would just try to really focus on making it tailored and appropriate to whoever the target audience is. So maybe that touches a little bit on your question. All right. Then there's another question. What proportion of investments are profitable? Not sure what you mean by profitable in this question, but I'll rephrase it as I understand it. So I guess how I read the question is sort of which ones end up being good, rather than not, and become sort of net positive return for us. Um, it really varies, but as I said, it's a minority of the deals. Not all our investments end up being good investments. And when it comes to the fund returner and who, the typically there are just broadly across venture, given the power law dynamics, there will be a few individual companies which will be the fund returners of the fund. There may be a lot of companies that are doing well. So I guess in the definition of profitable here, totally fine investments, but they may not be fund returners. And then there will also be some investments which aren't good and don't end up working, and that's fine. That's part of that's part of the structure of venture, and that's okay. Just because one investment isn't successful doesn't mean that that founder's next companies won't be. And we're if we have that relationship and trust in the founder, we're happy to reinvest into a new company that they're building. So that's fine. That's the nature of the industry, and it's something that everyone is aware of. And that's how we think of it really when we make investments. That we're aware that it's high risk, but also high reward potentially. Okay, here another question. What's Index's ratio of inbound versus outbound for sourcing investments? I don't um, I don't have a precise answer there. I can maybe only just speak to my own investments that I've been involved with, which is by no means maybe representative of everyone, but just for my own personal. So um, I'd say in my experience, it has been almost maybe 50-50. So I guess how do we define inbound and outbound here? How I define outbound in this context is I've done research on a topic and identified an opportunity and tried to get in touch with the founder, and eventually through that it led to an investment opportunity. And inbound was it came through a warm recommendation, or it came through um, uh, somebody in our network that we rate that pointed us to a particular opportunity, and maybe I'd classify that as inbound. If that's how we think about it, I'd say maybe broadly 50-50. But again, it really varies and there's no right way. It can be anything. All right. I think I'll let Julia correct me. I think I've addressed most of the questions here in the chat, and happy to pause and see if you'd like me to go down any direction here.
Yeah, so I've got a kind of general interest question for now, because you were mentioning earlier about kind of, you've talked a lot about finding themes and trends and focus areas. Is there any particular focus area that you think is really exciting at the moment? And on the other side, has there been a focus area that you think may have been a bit overrated by the VC industry as a whole?
Yeah, no, absolutely. Great question. Yeah, so I mean, I touched a bit on the creator economy earlier. I think that seems to be an area that has a lot of tailwind. A theme that I personally have been quite excited about and been involved in an investment in is just the e-grocery space. So I spend a lot of time looking at consumer opportunities. And what's excited me about that is that with COVID, it has led to new habits and behavioral shifts for consumers, really across age groups. And grocery is a huge sector. It's a $2.2 trillion industry offline in just Europe. So if you think that maybe 10% would go online, that's a $220 billion TAM in just Europe, which is large, and it's universal as a need for consumers. And so I think it's a trend that is representative of a bigger macro behavioral shift that I found to be quite exciting and spent time on. And we've spent time on as a firm, and we've invested into Rolik, a Czech full stack e-grocer that now is expanding across Europe and that we're really excited about. So, that's definitely a sector I've been spending a bunch of time thinking about. I guess the flip side of that argument, um, one area within grocery that has been getting a lot of attention is this instant delivery. So you have, anything from Getir to Gorilla, as we see, Flink. There are so many of them in Europe now, and I think it's a great validation of the demand. Consumers are seeking more optionality for online. That said, I do, from my perspective, think there's been a lot of capital that has been invested into the space, and I think it's still unclear how it will play out. So maybe that's one where there's been a little bit, um, it's been almost too hyped, if that's even something that you can say. But maybe just I just wanted to give you a concrete example of how it can go in both directions there when you're exploring a theme. Hopefully that gives perspective.
Yeah, I think that's great. I think there's a couple more questions that have just come in as well.
Okay.
The last couple of minutes.
All right. So past speakers have referred to groupthink. Um, how do you avoid following the same path as everyone else is saying? Yeah. It's a great question, and it's something that we definitely strive to continuously improve on, to make sure that we, uh, can have a competitive edge, and also hopefully meet with founders that others haven't come across, given how competitive things are. Um, um, you know, um, yeah, how do you avoid following the same path as everyone else in sourcing? I think one way to do it might just really try to spend a lot of time in uh, local hubs in person. Of course, that was harder to do with COVID, so that sort of harmonized the playing field for everybody. But if we can travel a bit more frequently again, one way to really perhaps try to identify pockets of talent that maybe haven't had so much exposure to VC just yet could be by just spending a lot of time in person in local hubs and meeting with individuals, and through that local network trying to meet with potential founders. But as for sort of tactics to do so and not fall into groupthink, I think it's something we're continuously iterating on, and it's continues to be a work in progress. And I certainly wish I had the answer to that, but don't really today. So do you think, another question here is, do you think deal sourcing needs some sort of innovation? If yes, how? I mean, I think we should always strive to improve and be better. I think there has been innovation happening with the wave of more data science reliance that's been going on. I think if we're looking at venture, 15 years ago, it was pretty much all network driven. But today, there's a lot more um, data science reliance, and some funds have been very vocal about the amount of efforts they're spending on this and really relying on external data signals. So I think that's been a big wave of innovation that's happened on sourcing, and I'm sure we'll continue to find more ones going forward. All right, I think that answers. Okay, we have another one here. Um, All right. So do you think the increasing valuations and round sizes will be reaching a point of where it's difficult to justify? Um, yeah, it's certainly a relevant question because valuations are going up. I guess the rationale for that is, um, uh, valuations are going up, but um, similarly, the potential for outsized returns and really seeing companies reach a more meaningful scale at liquidity events has also been increasing. If we're thinking about 10 years ago, $1 billion reach was massive, and today it's still a very meaningful number, but today it's maybe more equivalent that a $10 billion number as a liquidity event is meaningful. So you're also seeing companies seeing much higher liquidity events, and so if you know that that's the path forward, and if you believe that this company has the potential of reaching a TAM and a market cap that's north of 10 billion, then rationally maybe the argument of a higher entry price doesn't matter, because if I'm investing at, just for the sake of argument, 100 million pre-money, or if I'm investing at 300 million pre-money, of course that's a big absolute delta when I'm just looking at my entry price. But if I believe that I think this company is going to be worth $10 billion, maybe it doesn't matter if I paid 300 or 100, because it's still so significantly higher than what I paid, whether it's 300 or 100 million. So that's sort of the rational argument for how to think about it. And maybe just that example helps to contextualize what's also happening in the industry. Yeah, another question. It's a great question. How do you value a seed or pre-seed round? At the early stages, I'd say it's more an art than a science, in that it's any venture investor will typically seek significant minority ownership. So it's usually between 15 to 25%. And it'll come down to a question of how much dilution a founder is willing to give up early stage, for the trade-off that they're getting the best set of investors that they would like to have around the table as partners for the journey of that company. So that's usually how I think about it. It's less of a scientific exercise at the early stages, and more a question of ownership and ensuring that economics make sense for everyone involved as part of that investment. All right. So another question is, example of how one can do a successful cold outreach in a way that leads to a meeting with the founder or company. What should we do? All right. Giving away my secrets. Um, the only thing I'd say is, in a similar way to uh, how I encourage that a founder should also spend some time tailoring the potential inbound to a venture investor. I think, similarly, so should I. If I'm reaching out to a company, I shouldn't just reach out, um, assuming that the founder is open to a meeting, but also spend a bit of time tailoring that message. Why would Index be a good partner to you? What investments have we done that might be relevant for you? Why do we have a particular interest in the segment you're in or the geography you're in, and just make it a bit tailored. That's maybe one thing I'd encourage anyone looking to do outbounds to do.
Okay, great. I think we've come to the end of all the questions, and we've only got 5 minutes left, so I think that's actually pretty good. time to maybe wrap this up, finish on time. Thank you so much, Sophia, for coming through and answering all the questions, sharing your insights. I'm sure everyone's learned a lot. It's been really insightful, so thank you.
Thank you.
And everyone else, thank you for joining. Thank you for asking all the questions.
Great.
And yeah, just again, a little reminder, yeah, mentors are coming. Recordings will be up at the end of the week for those who weren't here at the very beginning of the session. And yeah, I am going to be away tomorrow. So if I don't get back to you over the weekend, I will get there at the beginning of the week. So thank you. And yeah, we'll see you and goodbye.
Thanks, everyone. Bye.